We are going to see a basic break-even chart showing the margin of safety. We have seen this chart in our previous videos, but we are going to have a quick look at this. So if you look at this graph, the break-even point is 3,000 units. So that means until 3,000 units, the company is not going to make any profit. At 3,000 units, there will be no profit, no loss. But if you look at the graph, the company is planning to sell maximum 15,000 units. So any number of units the company is selling beyond 3,000, the company is going to make profit. So if you look at the margin of safety is the difference between the maximum number of units the company is going to sell, take away the break-even point. So in this graph, it's 12,000 units. So the business is making profit on the 12,000 units of its products sold. So, and its sales could fall by 12,000 units before the break-even point is reached. So that means in order to reach the break-even point, this particular business has to lose 12,000 units worth of sales. We are going to see what is margin of safety in greater detail. So as we all know, margin of safety is the difference between the budgeted sales and the break-even point. Now, why do we calculate margin of safety, or what is the purpose of calculating the margin of safety? Margin of safety will show how much sales a company can afford to lose before it suffers a loss. So if you look at our previous graph, that particular company can afford to lose 12,000 units of sales before reaching its break-even point. So the size of margin of safety is a very important indicator of the soundness of a business. Also, companies use margin of safety to see whether a product is worth selling or not. Okay, now we are going to see products with a higher margin of safety has lower risk of making loss, and products with a lower margin of safety has high risk of making loss. So in our previous example, the margin of safety as a percentage of the budgeted sales, because margin of safety was 12,000, the budgeted number of units 15,000. So if you calculate the percentage, 12,000 divided by 15,000 times by 100. So the margin of safety is 80% of the budgeted sales. So the company has high margin of safety, so less risk. But the common cause for lower margin of safety is higher fixed cost. Okay. Now we are going to look at the final point. Margin of safety signals to the management the risk of loss that may happen when a significant amount of sales are at a risk of decline or not profitable products. So we all know low percentage of margin of safety might cause a business to cut expense, because if they don't cut the expense, they can't increase the margin of safety. So later we will be looking at how to increase the margin of safety, as high margin of safety is preferred by businesses. We are going to see how to calculate margin of safety. Margin of safety can be calculated either in units or as a percentage of budgeted sales revenue. Now, margin of safety in units is budgeted sales in units, take away the break-even point in units. And margin of safety as a percentage of budgeted sales revenue, which is equal to budgeted sales revenue, take away break-even sales revenue divided by budgeted sales revenue, times it by 100. So the first one we will get the margin of safety in units, and the second formula will give us the margin of safety in money value. We are going to see why high margin of safety is preferred by the businesses. As we have seen before, margin of safety will give an indication to a business the maximum amount of loss that a business can bear. So this will help a business not to suffer too much negative impact. Because if the business has bigger margin of safety, the risk will be lower and the lower risk of insolvency as well. Therefore, businesses always prefer to have a high margin of safety with a wide buffer to bear the sales volatility. So high spread of margin of safety assures a company that it is protected from sales variability. So a business can use margin of safety to identify whether it's worth selling a product or not. Because if the product has lower margin of safety, it is not worth taking a risk, especially the business environment is volatile. So here we are going to see how to increase the margin of safety. The first one is to increase the contribution per unit. So we all know contribution per unit is equal to selling price per unit, take away the variable cost per unit. So in order to increase the contribution per unit, companies can either increase their selling price per unit or they can lower the variable cost per unit of the product. But increasing the selling price per unit will not be always possible unless the market conditions are favorable or the customers value the company products. So in those cases, the company can increase its selling price. The second way, by adopting a profitable product mix, or companies can lower the break-even point. So in order to lower the break-even point, they should try and reduce the fixed cost. Now the final point, they can increase the sales volume by increasing the sales capacity. But selling more products will increase the margin of safety. However, this only applies if costs stay the same or they decrease. Because if the cost also increase, the increase in revenue may have no impact. We'll see some other points to note under margin of safety. The first one, will a negative margin of safety possible? Yes, it is possible because margin of safety can be negative. This means the current sales level is lower than the break-even point. Then this means that the product is making a loss, so the margin of safety is negative. Now the second one, a decrease in revenue is obviously bad for a business. So if revenue is decreasing, a business is at risk of not breaking even or having a very low margin of safety and the levels of profit. So the only scenario where a decrease in revenue is not damaging to a business is when the costs are also decreasing with the revenue. So the revenue is decreasing, but at the same time, the costs are also decreasing. So if costs are also decreasing, the business may be in the same overall financial position. Sometimes, if revenue decreases, businesses can reduce its cost as well. For example, by sourcing cheaper materials or employing fewer staffs. So this way, the companies can cut down the cost. Now we look at the third point. A minimal margin of safety might trigger an action to reduce the expense. So as we have seen before, if they reduce the expense, obviously the margin of safety will increase. Now the problems with margin of safety. So the margin of safety concept does not work well when sales are seasonal. So since some months, so we know if it is a seasonal business, in some months the sales will be really high. So we call it peak months, and in some months the sales will be really low. So to overcome this problem, we can annualize the information. Annualize means we can calculate the sales for the whole year. So the information will integrate all seasonal fluctuations into the outcome. So we are going to see some examples. As I always mention, you need to practice as many questions as you can. Okay, so here we are going to see some examples only. So the example one is Aero Limited. So they have given some information. They said the selling price per unit is £80, variable cost per unit is £15, fixed cost £25, budgeted profit is 3.75 million. So we need to calculate the margin of safety in units, and also we need to express the margin of safety as a percentage of budgeted sales. So we'll see. Okay, we are going to do this Aero Limited example. So a quick summary of the question. Selling price, variable cost and fixed cost per unit is given. Also the budgeted profit also given, which is 3.75 million. Now we need to calculate the margin of safety in units and also as a percentage of budgeted sales. Okay, first we'll see the margin of safety formula in units. So as we have seen before, the margin of safety in units is equal to budgeted sales in units, take away the break-even point in units. So here, they didn't give us the budgeted sales. Okay, so we need to calculate the budgeted sales in units. So from the question, we can calculate the budgeted profit per unit, which is selling price minus the total cost. So the selling price is 80, take away the variable cost per unit is 15, take away the fixed cost per unit is 25. So the budgeted profit is £40 per unit. And also they have given us the budgeted total profit, which is 3.75 million. So we can calculate the budgeted number of units, which is 3.75 million is the budgeted profit, divided by the £40 per unit, which is the budgeted profit per unit. So we will get the budgeted number of units is 93,750 units. So we have done the calculation of budgeted sales in units. Now the next step, we need to calculate the break-even point in units. So we know the formula for break-even point in units, how to calculate the break-even point in unit, which is fixed cost divided by the contribution per unit. So the fixed cost is £25 per unit. So the budgeted number of units is 93,750. So the total fixed cost is £25 times it by 93,750 units. So we will get the total fixed cost of 2,343,750. So we know the fixed cost divided by the contribution per unit, which is the selling price is £80. Take away the variable cost £15. So the contribution per unit is 65. So the break-even point in units is fixed cost, which is 2,343,750 divided by the contribution per unit, which is 65. So we will get the break-even point in units is 36,058 units. So now we have all the necessary information. So we can calculate the margin of safety in units, which is the budgeted number of sales units, 93,750. Take away the break-even point, which is 36,058. So you will get the margin of safety in units of 57,692 units. So that's the first part of the question. Now the second part, margin of safety expressed as a percentage of budgeted sales, which is margin of safety 57,692 divided by the budgeted number of units, which is 93,750 times it by 100, which is because we are going to do the percentage. So you will get 61.54%. Now we are going to see another example, which is Excel Limited. So Excel Limited produces and sells a single product called X. The selling price per unit is £20. Fixed costs are £480,000 per month, and X has a contribution to sales ratio of 60%. So for the month of August, the actual sales revenue was 1.5 million. Calculate X's margin of safety in units. So we are going to do this question, Excel Limited. So in this question, they have given us the selling price per unit, the fixed cost per month, and the contribution to sales ratio, which is 60%, and sales revenue, which is 1.5 million. Now we need to calculate the margin of safety in units. So as we all know, we need to start from the formula. So margin of safety in units is equal to the number of units sold, take away the break-even point in units. So first we need to calculate the number of units sold. So they have given the sales revenue for the month of August, which is 1.5 million, divided by the selling price per unit, which is £20. So the number of units sold is 1.5 million divided by £20. So we will get 75,000 units. So to calculate the break-even point, so that's the one we need to calculate now. So we need to know the contribution per unit, which is not given in the question. So as usual, we need to calculate the contribution per unit. So the contribution per unit is, all they have given is the contribution to sales ratio, which is 60%, and the selling price is £20 per unit. So contribution divided by the sales, which is £20, equals to 60%. So we can cross multiply and we will get the contribution, which is 60% times 20. So the contribution per unit is £12. So now we can calculate the break-even point in units. So we know the formula, break-even point in units is fixed cost divided by the contribution per unit. So the fixed cost is 480,000 divided by the contribution per unit, which we have calculated, £12. So the break-even point is 40,000 units. Therefore, we can calculate the margin of safety in units, which is the number of units sold, 75,000. Take away the break-even point in units, which is 40,000. Therefore, the margin of safety is the difference between 75,000 and 40,000. So that is equal to 35,000 units. Some exam questions, they will give you the margin of safety either in percentage on sales or in number of units. And they will ask you to calculate, for example, the fixed cost. So this is called backward calculation. So this type of calculation is quite popular in some exams. So we are going to see that type of backward calculation in example 3, which is our Pinto Limited. So we'll see the question now. Pinto Limited makes and sells a single product which has a contribution per unit of £35 and the contribution to sales ratio of 40%. Pinto has budgeted to sell 2,500 units for the month of October, which has a margin of safety of £65,625 in sales revenue terms. Now the question is, calculate Pinto's total fixed cost for the month of October. So this is a good example of backward calculation. So we'll start with the formula. Always we will start with the formula. That's the best way to start a question. So margin of safety in pounds is equal to budgeted sales in pounds or in money value. Take away the break-even point in money value. So the budgeted sales in money value, for this, we need to calculate the selling price per unit because they have given the number of units, but they didn't give us the selling price per unit. So we need to calculate the selling price per unit. So they have given us the contribution to sales ratio. They have given the contribution per unit. So contribution per unit divided by the selling price per unit is equal to 40%. So contribution per unit is 35 divided by the selling price per unit, which we don't know, is equal to 40%. So the selling price per unit is 35 divided by 0.4 or 40%. So the selling price per unit is £87.5. So we can calculate the budgeted sales in money value now. So we know the number of units, which is 2,500 units, times it by 87.5, so which is our selling price per unit. So we can calculate the budgeted sales in money value. So 2,500 times 87.5, which is equal to £218,750. Okay, now we are going to apply this in the margin of safety formula. So we know the margin of safety in money value, which is given, which is 65,625, is equal to our budgeted sales in money value, which is 218,750. Take away the break-even point in money value. We all know the break-even point in money value formula is fixed cost divided by the contribution to sales ratio. So here we don't know the fixed cost, but we know the contribution to sales ratio. So fixed cost divided by 0.4. So if you sort this out, we will calculate the fixed cost of £192,500. Here we are going to see another backward calculation example, which is called the Root Limited. So Root Limited has budgeted to sell 7,500 units for the month of March. It has calculated its margin of safety as 25% of budgeted sales. Selling price per unit is £60. Variable cost per unit is £35. Calculate the budgeted fixed cost for the month of March. So we'll see. As usual, we need to start with the formula. So margin of safety in units is equal to budgeted sales in units, take away the break-even point in units. Now, the margin of safety in units, the question says the budgeted number of units is 7,500 units, and the margin of safety is 25% of the budgeted sales. So the margin of safety in units is 25% times it by 7,500. So we will get 1,875 units, which is equal to the budgeted sales in units, which is 7,500, take away the break-even point in units. So we all know the formula how to calculate break-even point in units, which is fixed cost divided by the contribution per unit. So we don't know the fixed cost, that is the question, but we know the contribution per unit, which is £25, because the selling price is £60, take away the variable cost £35, so the contribution per unit is £25. So if you sort this formula out, so the fixed cost divided by 25 is equal to 7,500 take away 1,875. So that is equal to 5,625. So we can calculate the fixed cost for the month of March is 5,625 times it by the 25, which is the contribution per unit. So our fixed cost for the month of March will be £140,625. Thank you for watching. Please like, share and subscribe if you like this video. I'll see you with target profit.